I'm Catherine Ross, and I'm here live from the NYSE. Jim Cramer's off this morning. So joining me is Jeff Marks, Senior Portfolio Analyst for Action Alerts Plus. Jeff, let's start with the news that the U.S. was reportedly looking into delisting some Chinese companies like Alibaba and Baidu. Now, of course, we had Peter Navarro come on CNBC this morning and say that was fake news. What were the reports on Friday caused by the U.S. wanting to make China a little nervous?
Yeah, it's an interesting point. It's an interesting tactic. I mean, so last Friday, as you mentioned, the market sells off on this news that we may restrict IPOs, and it's a good question whether it's about is it like a transparency thing, because these Chinese companies they're not as regulated as American companies. So I know from some of the reporting that Jim did last week, it might have been a matter of all these U.S. pension funds being forced to invest in Chinese companies to make sure they're with the right exposure with the MSCI recommendations from an index perspective. But then, as you mentioned, the story gets walked back this morning, shot down by Peter Navarro, and now we have the market up. So I'm looking at it less about as a ploy on the trade tactic side, and just from an investing standpoint, it's another reason why it makes it too hard to react to these headlines, because you may be buying or selling a company on an idea from one day, and then that completely reverses the next day, as we're seeing here with the market up. So instead, as I've been saying, really what we're telling people over in Action Alerts Plus throughout this entire time is focus instead investing in companies that are either market share gainers, have really strong management teams that can navigate the tariffs, or they're exposed to secular trends. Because I think as long as you're one of the three, hopefully within three of the three of those categories, I think you'll be all right during this volatile, uncertain time.
And we've got another day and another bankruptcy headline. Now, Forever 21 is reportedly going to file for bankruptcy, and they're going to close around 180 stores in the U.S. Does this show the death of the mall to you?
Yeah, I mean, the mall's in secular decline. It goes against one of the investing themes that I just mentioned before, and I think that's something that's here to stay. I think the mall is just so bad. You either need to be You need to, it doesn't really fit in this off-price or online mold. So who else is struggling in the mall? Macy's, Nordstrom, big department stores like that. But also when I see headlines like this, I also like to think about who might gain from Forever 21's losses. And I'm looking at off-price retail, because if we see more and more retailers struggle with their inventory, closing down stores, all of that inventory is going to have to go somewhere, and that's going to go to off-price, and that's going to be TJX, Ross Stores, and Burlington, which we own over at Action Alerts Plus. So they're also, it's a tariff-resistant group because they're off-price and they're buying inventory from others. They're not really going to get hit on the import side, and it's off-price. It's discounted goods, so it resonates with consumers, all types of consumers. So off-price is really the retail. If you're looking for a non-watch group, and that's Walmart, Amazon, Target, Costco, Home Depot, I think off-price is a good place to be in.
Now, I want to switch from retail to cars, because Tesla is our real money stock of the day. Now, the 100,000 deliverable number is the sweet spot for investors, but we've seen reports this morning that, CEO Elon Musk may not actually hit that 100,000 number. When you get CEO Elon Musk telling people that we're going to get 100,000, should investors take that with a grain of salt?
Yeah, it's interesting. I feel like we're always kind of in this guessing game with Tesla, this way or another way. I do think it's right to always kind of have a degree of skepticism whenever we hear these things. I think it's like a Buffett quote, who once said, like, even a country will defend its currency the night before devaluation. Paraphrasing, of course, on that one. But at the same time, I wanna believe in Musk, because I do think he has a good message, a great product with his cars, and it is moving away from oil. But the skeptic at me will stay skeptic. So I mean, if you're investing in Tesla right now, I would say you'll probably do it because you're a believer in Musk. So there, you should take him for his word. And if they come up short, I'm sure they'll have a clever explanation why.
Now, Tesla may be moving away from oil, but we're going back to it, because the BP CEO is reportedly looking to retire, maybe in the next 12 months, is what Sky News said. Is this going to show a change in big oil?
Yeah, so Bob Dudley, he's leaving BP. He might be stepping down from BP. He's been at the company for so long, and he's been a really
over a decade.
Yeah,
right, as CEO?
He's been a great operator. So he really kind of helped BP get through the Macondo liabilities, which is Deepwater Horizon, which that horrific accident that they're still paying it off. But we own BP over at Action Alerts Plus. I mean, we've liked the company from the standpoint that break-even costs are coming down. They have good production growth, really strong free cash flow growth, and a very safe dividend. However, it's a good house in an awful neighborhood, and I don't want anyone to join the house of pain with us on that one unless you're really looking for income. Yeah, I mean, he's been a great executive. I think at BP is they've been doing so well up until this kind of the last couple year hatred for oil stocks. So when he does retire, the group will be losing a good operator.
All right, Jeff, thank you for joining us.
Thank you.
And speaking of Action Alerts Plus, if you're on TheStreet.com or on Facebook Live, we are now heading over to our Action Alerts Plus Daily Rundown show over on ActionAlertsPlus.com. I'm Catherine Ross, and we'll see you tomorrow.